Morning, 10:08 a.m. California time. Market analysis, Stan Ehrlich. This is Friday, December 20th. I will not be here next week. I will not be doing YouTube all of next week. I apologize, Christmas holiday, going down to my daughter. So um, let's get rolling here. Remember, I start with stock market indexes, and today we have a combination of two great, fantastic entries, an ER buy signal on the exact first day of the Santa Claus Rally expectations that I've been talking to you about for weeks. Typically on Fridays, I've been outlining some of the details, and I'll show you exactly what the system ERSignals is doing and the seasonal tendency trade, the Santa Claus Rally. So let's go jumping right away to the 1 minute chart. This has got a green daily bar because the signal has happened a while ago with a big rally following. Okay, E-mini, 1 minute chart. Now, this is the entry for ERSignals right there. And that's because it was a bullish engulfing with oversold conditions on the daily data chart. And this is where it got above yesterday's high right there. So we're long from this price at around 8:20 this morning, making money on ERSignals, ER1 scalp, and ER1 overnight. The scalp trade stop automatic is already up high enough to lock in a profit on the trade. And as you can see, we're currently with a stop at about 60.22. The ER1 overnight stop is slower on purpose because we're looking to hold the trade for a swing trade for a few days or even a few weeks. So we're not using such a tight stop. But this one is a scalp. You know we're out before the close, and we're already locking in a profit. So they're doing great. Now, I'm frankly expecting new highs soon. The Santa Claus Rally entry, I've been talking about 6:40 in the morning, and I do apologize. Our research overnight says 7:10 is now the better time to be a buyer. And this is 7:10 this morning, a little bit cheaper than 6:40 for the E-mini. And we're long at either a little higher. I'm sure you're not complaining too much. We had a little dip afterwards. But here, if you did get in 7:10, which is what the new research says, you don't have a 1 minute loss, not for 1 minute. It just took off immediately. Here you had a little 10-minute little bit of a dip, and then it started to come back. And yeah, it took about 40 minutes for it to turn profitable. What am I looking at? 6:40 to 7:10, 30 minutes. Okay. Looking great. Now I will drag the arrow to the current quote, and that would be your trade line on the Santa Claus Rally, or doesn't change too much, a little bit less of a profit. That would be your trade line on the other, which I've told you incorrectly at 6:40 to buy it, and it should be 7:10. Remember 7:10 for Monday and Tuesday. These trades are just working fabulously. Next, we got the spider. It's almost identical. I'm not going to spend any time on the daily data chart. Let's go right away to the 1 minute chart. And this would be your Santa Claus Rally profit at the moment, right up to that level. And this is in at 7:10 in the morning. I'm having a little trouble with my platform here this morning, and that's not good. So let's hope it comes back. I hope I can change to the QQQ here. Come on. Don't do this. I think it's overloaded in memory and a lot of activity here. So if it doesn't correct itself in a moment, I'll have to. Oh, good. Okay. At least you can see the trade. Okay, that's good. Now let's go to the QQQ. Now, the QQQ did not get oversold, so we don't have a green ERSignal, but we do have a bullish engulfing. And it did get down to my first support area on Wednesday, stay basically there, the trend line on Thursday. And today, although we dropped below the bull trend line, we've been able to rush back up again with a bullish engulfing. And therefore, I'm looking for new highs before the end of the year. Now, the 1 minute chart on the QQQs, again, no signal. If you wanted to buy it, just put your cursor on 710 this morning, and that would be right about this price level right about here, 512 and 0.25 for the QQQ. Daily data chart for the NASDAQ is a bullish engulfing, but it didn't get oversold. QQQ, NQ. So we don't have a signal, but that doesn't matter about the Santa Claus Rally. Remember, regardless, you're supposed to be buying it around 710. And if you did that on this chart, that's California time, of course, 710 this morning on the, come on, cooperate. My cursor just locked up on me. Doggone it. Well, I'm pointing to 727 at the moment. There we go. 710 would be right about this price and time, right about there. There we go. So that's great. It went straight up basically after 710 this morning. Now, the daily data chart on the YM has a bullish engulfing ER buy signals because it is oversold the last 3 days, including today being the fourth day. Plus, we came down to one of my support areas that I've had this line on the chart for quite a while, almost exactly for today's low, and just turned around. Fantastic. I am looking for a move back up again, frankly, to new high ground before the end of the year. Might be in the first week of January. We'll see. Next, this is the YM ER1 scalp. Stop is here, way above where we got long. ER1 overnight got long at the same price, and here's the stop for the ER1 overnight. This happens to be a predictor for the entry for ER3 during the next 3 days after today if everything closes strong. So just kind of disregard that. It's not useful at the moment. It is for Monday and Tuesday and Wednesday. So, and Wednesday the market's closed, so it'll be Thursday, Monday, Tuesday, Thursday. And Tuesday's probably going to have an abbreviated trading session because of the next day being a holiday. Take that into consideration. Things are doing fabulous. Where is 710 in the morning? Right here, approximately 710 right there. So right in this minute, we would have been buying the YM if you wanted to trade the Santa Claus Rally on the YM. Let's look at the Russell. Now, the Russell is oversold for the last 3 days. But guess what? Today's high to the exact tick is exactly the same high as yesterday. So we don't have a bullish engulfing. One more tick new high today, anytime today, will create an outside up day, a bullish engulfing, and it'll turn green, and we'll have an ER1 scalp in progress and an ER1 overnight in progress, maybe a little later in the day, I hope, but not quite yet, missed by one single tick. Therefore, there's no entry on this rally, and it's right up there at exactly the same tick high as yesterday so far. Just a little bit more strength, and we're going to end up with a bullish engulfing ER signal. Now, bonds are up 29 ticks. Love it. They got down to the neckline for the single shoulder bullish pattern. This, I hope, is the last chance for the last shoulder on the double shoulder 2-year head and shoulder bottom to finish the decline. It's a little bit wider in time than I was expecting, more in the October time frame. So here it is, middle of December. Doesn't kill a pattern. Price levels are good. Other formation levels are good. It just needs to bottom out point blank, like now, today, yesterday's low, whatever, right in this price range. No signal because we didn't make a lower low than yesterday, but oversold at a support line could very well be the start. Next confirmation that we do have a last shoulder low would be closing above 120.18. 10-year notes, almost exactly the same commentary, pattern, everything about the same. Looking for a huge move up in bonds. 150 is the upside objective in the bonds long term. Sometime I'm thinking in the second half of next year, or maybe even 2026. The upside objective on the notes is 126 and a few ticks. And the same time frame and everything else basically applies. The numbers are simply different. Let's go to the crude oil. I'm still between a rock and a hard spot. Can't break out to the upside, can't break out to the downside, got no signal, got no oversold, no overbought. It's just going sideways for a while, and I got to wait. No comment. A little bit bearish bias, but not much. More bearish bias here on the short side of the heating oil because we do have a support level I think is going to get broken. Resistance stopped the last rally in the last few days. We today are making minor new lows for just a few days. But that's the beginning. It's always got to do that as it starts to work lower. So although it's down very little at the moment, I'm looking for support to give way and the market to make new lows below 2.075 and probably get into the support zone at 1.9880 and lower to maybe the trend line, the support line. Next, we've got, wow, a natural gas head and shoulder bottom. We are right at a critical point, very critical. Above this level we're at right now, 3.776, give or take a couple of ticks. We are at the breakout. We're at the neckline. If we close higher than this, you've got a bullish breakout. One or two problems, actually three, we're right smack dab at this resistance zone. Second, we're at the neckline and haven't broken through it yet. Third, we're overbought. Now, being overbought on a breakout is typical. So that's not really that much of a problem unless we don't have a higher high here. We need to gain ground. We need to close above where we are, and then we're going to have a bullish breakout. But if it fails, this is the exact spot where the market could fail to break out of its head and shoulder bottom. Here's your first shoulder low, August 28th. There's the bottom of the market with a bullish engulfing buy signal. I love it when they're on the turning points. And I've got a turning point on the low right there on natural gas, on the high right there on natural gas, on the low right there on natural gas, on the high right there on natural gas. That's 4 in a row. Unfortunately, we don't have a buy signal in the last few weeks. So be careful here. If you're long, I would be raising my protective sell stop onto the market fairly tightly. I don't know, something about 3.70. Maybe a little lower, maybe a little, it depends on your personal preference. But I would be tightening it up. And if it gets higher, stronger, quicker today and closes stronger than we are now, great. You're making more money and you're not out. But if it fails, this is the exact spot where it might. Watch carefully. Next chart. We have a head and shoulder top developing in gold. We have the lower low yesterday by just a tiny bit with a slightly higher close. Today we're rallying, but consider we were close to oversold and a rally doesn't do any damage at the moment to this chart formation. I need to get down to the neckline, which is way down here. So it's not going to happen, probably not going to happen right away. Maybe later next week or even after that. But it's got a ways to go. And first we got to make new lows below 2566 and then attack the neckline, blah, blah, blah. But if it does break down, the downside objective is going to be around 2250. Next chart is the silver, which yesterday barely broke out, not too convincingly, and there's a problem. Today, it should have stayed below the neckline, most if not all of the price range, and dropped off to a lower close again, and maybe a significantly lower close after the breakout, because that's what we call follow through, and we didn't get any. In fact, the bad part is we're moving back up above the neckline now and jeopardizing the whole damn pattern. We have a profit on the trade. We were short from the rally high for the last shoulder. That's great. And we have a stop that's protecting a nice profit, but I probably should lower that stop down, at least half of that distance, probably to 30.5. But I'll be gone next week, so you won't see it. And it's either going to make a chunk more money or we'll probably be stopped out sometime during next week. And it's automatic, so I don't have to worry about it. Let's look at the platinum. And I'm running into a problem trying to change my chart here. And the software is locking up on me a little bit. This is not good for my YouTube, is it? Sorry about this, people. Hopefully it's going to correct this any moment. Or I might have to. Good news. And this went to high grade. That's platinum. Did not break out in platinum yet. No breakout yet. Toying with the breakout in the last few days. Not particularly normal. Normally it gets down to the neckline and just goes right through it like crazy. But I've seen these instances where it toys with you, tries to break out, didn't do it, ended up with the last shoulder almost decisively. There's no room left. Too much time has passed. It needs to just plain everyday break out to the downside or something's wrong with this. So closing above, let's say 966 would kill the whole damn pattern. Not breaking out to the downside for another several days would tend to kill the whole pattern, but not completely. I just need to see it start making new lows, break out below the neckline, and drop like a rock. Next, we've got the high-grade copper oversold condition at support. No particular pattern involved. We're still short from the rally high. We got an ER signal on 12/12/24 only a week ago or so. That signal is doing great. We got a sell signal on the top of the market September 30th, wrote it down, got bumped out, but the next day we got right back in again. I think it's actually the same day we got right back in again. We got bumped out early in the morning. Then you had this big reversal causing us to get back short again. Yeah, we forfeit a little bit of price range in here. You're just back short a little lower than you were short before, or where you got out of your short before. So it's doing great. Locking a profit with our stop right here, and we'll see what happens. I think it's going to break down and start closing a new low ground since March. Next chart, oversold. Beans came back up right to my resistance area, as I told you in the last couple of days. What did I say, 977-ish? Probably 976, something like that, maybe 975. We're trading at 76.5 right now. This could be, should be, I would love it to be the rally high. And the next thing is for it to start to work its way lower and next week make new lows for the trend down. This is quite significant resistance, and it's just stalling out here. I think I've seen this same price for maybe an hour or two. So I'm looking for this to stop rallying. We are still short. There's your green trade line from that bearish signal right there. It just took a long time for it to finally start working real well. Our stop should be lowered, but I haven't done it yet. To lock in a profit right now, it's a little bit of a loss. But again, if you were going to go short or add to a short, I would consider watching it at these prices very, very closely. Next, oversold condition, a doji, no higher high, no lower low in soybean oil, but markets starting to make new lows since September. Oversold, allow for a bounce, no problem. I think it's going to make lower lows again and drop off a lot more. We did have what looked like a very good head and shoulder bottom building, but in the last week, it broke into new low ground for a few months, and that kills the bigger pattern. Now, I've left the neckline in, but it's nothing more now than a bullish resistance line on the way up. Yep, I think it's going to break down. In soybean meal, we had a rally back to resistance, but in this case, it's all the way back up to the top of the resistance level. That's all right. I thought it might stop here instead, but it was too close. Oversold for a couple of days. Nice rally, touching a resistance line and touching the top of the resistance zone. I think it's maybe going to stop right here and turn down again. New lows expected, still bearish. Next, we got a nice bounce in corn. We thought we had a head and shoulder bottom that broke out. When it got overbought, it went through the line, but it closed below the line for several days, causing me to eliminate the head and shoulder pattern from the chart. And now all I've got is a little zigzag uptrend that I don't really trust much. The long-term trend here in corn is still obviously bearish. So I'm looking for lower levels. I think this rally could stop right around where it is, and we'll see new lows next week and maybe even below 425 before the end of the year and lower. Next, wheat is making a new low already today. Did make new lows for months and months and a couple of years. Yesterday, with it being oversold, I have to allow for a little bit of a bounce, and that could be up to resistance, but that's so close, I think that's not workable. 539 is way too close. So where's it going to bounce to? Somewhere between maybe 556 and 570 and maybe 577. Those are my best numbers at the moment. Cattle, we had a sell signal on the high day on what has now been labeled a false bullish breakout. New highs completely failed miserably on December 16th with a bearish engulfing ER sell signal. That's why it's red. Went down the next day, down the next day, down the next day yesterday, finally bounced off of some support. Not quite oversold yet, but support level caused a bounce. That's great. Now, hogs bouncing with beef might be developing a top formation. I think there's something to be said about this rally being a shoulder, maybe. This is a possible head of the formation. And if you take the timing, and I'll do this real quick for you, from the highest high for the first shoulder to the head, we've had that much time. And you take that much time from the highest high of the head to the right, and the exact theoretical exact day for a rally high would be the day after Christmas, December 26th. So a little bit more strength up to about 87.90 would not be out of question, and topping out on December 26th at around that price level, the high 87 area, 87.75, 87.90, maybe 88 and small change, would be idealistic. And then Tierra del Fuego, head south for a last shoulder high. So that, while I'm gone next week, should be watched very closely in hogs. And let's go to our last chart, which is that stock that I've been watching for a month now. SQ, bottomed at a support line, has a giant 2-year bottom formation that's doing extremely well. Came back into support, bouncing today, starting today. I'm not going to be surprised with the bullish engulfings and the buy signals we are seeing in the other stock market indexes that that's it. This could be a low, and it's going to head toward new high ground before the end of the year in SQ. Okay, ladies and gentlemen, let's check the E-mini before I part. And we're seeing a little correction. And we are stopped out, while I've been talking, of our scalp trade right there. Come and gone. Great. Scalp trade made money on the ER1 scalp. Now, the lines I drew for the equity plot on the Santa Claus Rally obviously need to be adjusted to the current quote, and there's no official stop there. But that, if you're holding them, would be the profits. And I really don't like that because that's the price time period. 640. I told you about 10 minutes after the open, but I'm really claiming it's supposed to be 710, which is this one right here, a little cheaper. And we'll erase this one here real quick. And click on it and erase it. Good. So this is the one that I'm going to stick with. We'll see how it's acting when I get back a week from this Monday. We'll be doing the YouTube again, of course. There you have it. Thank you, ladies and gentlemen. You have a Merry Christmas. And have a happy and Merry Christmas for you and your family. profitable trading to you.